Back with the market right here in ET now, just looking at where the market is settling in at. And while, of course, it's one of those very, very quiet starts to the trading session, as has been the case actually, the index per se has been very sideways. But look at a Samvardhana, that's up over 5% right now. Britannia has seen a very solid move of 4.7% of an uptake. Kalyan Jewellers is higher by 2.7%. And IT, after a day's break, is back into the four. TCS is holding up a good 2.5%. Tech M, HCL Technologies, Infosys. These are all your big winners in trade as we speak right now. Bajaj Finance is seeing quite a bit of dip. It's down 4.5% along with FinServ, AB Capital, Trent, of course, after its numbers, and Crompton, which is lower by 6% as we speak right now. But let's welcome on board the management of GRSE. We've got Mr. PR Hari, the CMD, joining in on the show right now. Mr. Hari, great to have you today on ET Now. I want to talk about NGC first because that has slipped multiple quarters. Tell me, what's the specific pending hurdle and at what point does the retendering become a risk?
Thanks, Aisha. Yes, NGC is a contract that we are expecting. It's a high-value order, and this is something which we have been waiting for the last few quarters. And I expect the contract to be signed during the current quarter. There are no red flags, and I do not think there will be any further delay. That is my appreciation. We expect the contract to be signed this quarter, and the order value is likely to be the tune of about 33,000 crores.
Okay. And hi, sir. This is Harsha. The ONGC PSV win. It's your first major commercial PSU order. What's the pipeline of similar non-defense PSU bids that you seem to be pursuing? Give us a sense.
Thanks, Harsh. But before that, I just saw this being flashed on the screen that the order book is at a record low of 13,596 crores. I would put it in a different perspective. That is actually good news because that shows a very, very healthy execution rate. In the last year, we delivered 8 ships. That is almost a ship every quarter. And we intend maintaining the same tempo. And what I stated before, with the NGC order and the other orders coming in, we'll be able to step up our execution rate while also consolidating the order book. Now you're asking about the platform support vessel. This is the first order that we have got from the ONGC. And this is a translation of the aggregation of demands that was done by the Ministry of Port, Shipping and Waterways about a couple of years back, where a large number of platforms, small and big put together, were aggregated. And this is the first order that an Indian PSU has got based on this consolidation. And we intend pursuing this. And currently, a few RFPs, that is tenders, already promulgated by the Shipping Corporation of India for MR tankers, very large gas carriers and container ships. We see a huge opportunity in this segment also.
So you're saying that NGC will turn around very quickly. What specifically is going to bridge then the backlog gap to try and protect your FY28 revenues, given that you've already called out FY27 as the peak revenue booking year?
Yes, FY27 is a peak revenue year because this year we got a high-value project, the P17 Alpha project. The last ship is still under construction. We expect that ship to be delivered in the next quarter. Plus, we have the anti-submarine shallow watercraft that is also matured to a level where all the 4 platforms can be delivered this year, which means this year we'll get a high revenue. And if the P70 Alpha, if the NGC contract is signed in the coming quarter, we expect the revenue to start coming in from that project during the next financial year. By the time the other projects, there is a next generation offshore patrol vessel and a few projects which we are doing for the research vessels, these also will mature where max revenue will come from these projects. So we don't see any major deterioration in our revenue recognition in the coming years too. And incidentally, right now, between Navy and Coast Guard, 5 tenders are already out. They are live. The total order value coming out from these 5 tenders, that is for the P17 Bravo, 120 fast interceptor crafts, 22 interceptor boats, 31 water jet FACs, and 6 offshore patrol vessels. The total order value coming from these projects alone is about 81,000 crores. And we also expect 2 more RFPs to come out this year for the landing platform docks for the Indian Navy and also the mine countermeasure vessels, 12 of them. And this, the AON value itself is about, both put together, it's about 71,000 crores. So there is no dearth of orders that is expected in this year and the coming years.
But wage revision as well, that's set to push your employee costs upwards of 15 to 20 odd %, right, on a year-on-year basis. With EBITDA margins already fairly steady at a level of about 8.25%, how do you plan to protect the margins with this kind of a cost setup?
See, our revenue expenditure with respect to employee-related wages, it is only a relatively small portion of our overall revenue expenditure. And this is a very natural phenomena that happens every 5 years or 10 years. And we already factored that in our, let us say, our business strategy and our plan. So I don't see any impact of the wage revision affecting our margins in the coming years.
Crore Hari, I also want to try and understand how should one therefore look at execution for FY27 and FY28? You suggested order book coming off is obviously a positive, and I understand that because it shows that you're doing much better on the execution front. But new order wins, chunky ones, when are they expected to come in to give you that revenue visibility beyond FY28?
See, in FY27, as I mentioned, that we'll be closing the P-17 Alpha project as well as the anti-submarine shallow watercraft project. In FY28, as I stated, the revenue will start coming in from the P-17 Bravo, P-17 Alpha, NGC, and also the other projects which are maturing to, let us say, delivery stage, the offshore patrol vessel and the research vessels. And in addition, we also have other business verticals, including ship repairs, the Bailey bridges, and the deck machinery unit, padding up our revenue. So I don't see any major deterioration in the coming years. And with the more orders expected from the non-defense segment, as we are currently executing a multi-purpose vessel project for the German client, this project also will reach a higher revenue recognition maturity during the next year.
So you've guided for a very sizable 45 billion rupees plus kind of capex mark to take, the concurrent shipbuilding capacity from 28 to now 43 platforms. Tell me, what's going to be the funding mix exactly between internal accruals and debt?
See, I'll give you the background. Our current shipbuilding capacity is for 28 ships, and by end of this year, we'll ramp it up to 32 ships. But we fully realize that that is grossly inadequate to meet the huge demand that is available. So that is the basis on which we are going in for our expansion plans. Our expansion plans broadly comprise of 2 segments. One, medium-level expansion for brownfield facility, which we already commenced. We intend completing in another 18 months. And the large projects, which you mentioned, a capex of around 40 to 4,500 crores, that will be spread over the next 3 to 5 years. And one of these facilities is being undertaken in West Bengal, which will be a large facility, and another, as I have stated before, in Gujarat, which will be a total ship solution facility, which will encompass shipbuilding, green ship recycling, and ship repairs under a single roof. Coming to your question as to how we are going to fund this project, yes, definitely there will be internal accruals. We are going in for a joint venture for the project which we are undertaking in the West Coast, and definitely we'll be taking debt because we need to leverage the government's new policy of interest incentivization, where we get a 3% subsidy on the debt taken. So definitely the balance would be between debt and internal accruals. The firm numbers, perhaps in the later interactions, we'll be able to share because they are still under formulation.
Understood. But of your entire order pipeline and the declared one at that, which spans just so many products, P-17B frigates, there's MCMVs, LPDs, fast interceptor boats as well. What I wanted to understand is as to which of these do you see closing first, and how much of it is realistically L1 territory for your company as opposed to, shared with perhaps competing shipyards?
Yes, it is. There is definitely competition, but we are good to go with our primary focus will be on P17 Bravo, because we have just completed the P17 or rather completing the P17 Alpha project, and we will be bidding in such a way as to win this contract. So this will be our prime focus. What is it FACs? Again, this is an area where we are specialized because we have already delivered about 33 similar platforms to both the services in this segment. This is again a strong area. Coming to when these contracts are going to be signed, I expect since the RFP is already live, with the bid, so will most likely to get open during the end of this year, maybe in the third quarter, half of the third quarter. So I expect the contracts to be signed a year, 9 months to a year from there, which means sometime during mid 2027, these orders are expected to be signed. And as I stated, our primary focus will be on winning the high value P17 Bravo project.
Okay, and what about the export opportunity? How big how are you seeing it materialize in terms of timelines?
See, we are currently executing 2 export projects. One for a German client, 12 multi-purpose vessels project on track, as I stated before, that the revenue recognition in a higher manner will come during the next year when the project maturity reaches that state. We are getting a large a number of queries from the European market, but we are taking a calibrated decision because it is exactly at this point of time that the Indian domestic market has opened up. With the aggregated demand of nearly 200 plus platforms coming up, and of these platforms, at least 4 to 5 tenders are live. So we will take a decision as to where we should focus on export or domestic, because the similar platforms, if you're building for our nation with the similar revenues coming in, similar order book, I see no reason why we should focus only on export rather than diverting our resources to meet the domestic demand. Because as far as the company is concerned, the order book value and the revenue generation will be similar.
Right, Mr. Hari, great to have you today on ET Now, and congratulations. We're meeting after you getting granted the Navratna status.
Oh, thank you. Thank you. I forgot to mention that we are so proud to be a Navratna company. And we intend utilizing the financial autonomy that this status accrues.
Yeah, absolutely. I'm sure it comes with its fair share of advantages as well, specific operational as well as financial flexibility too for you. I'm sure it must be a very proud moment, but thank you so much for your time today.
Thank you.